latest inflation numbers may be the last positive economic news Canada sees for a while.
Home prices have been fading, and there's been a lot less pressure in the rental market. That's beginning to show up in the inflation numbers.
Inflation cooled to 1.8% last month. Even stubborn food price growth slowed by 0.7% in February, after a more than 30% spike in grocery store prices over the past 5 years. Relief that will likely be short-lived.
It seems like we can't catch a break for long. Just as housing costs are moderating and even coming down, and food looks like it might be past the worst. Well, now we get hit with a big run-up in gasoline inflation.
That expected run-up not captured in this data, as the war in Iran is pushing oil and commodity prices higher.
We're already seeing higher gasoline prices. So that pain is definitely going to be felt, if it hasn't already, by households pretty much around the country.
Cheaper gas over the past 3 years, a strong driver behind bringing inflation down to the Bank of Canada's key target. But any long-term supply shocks could reignite concerns.
When you raise the price of oil, you're raising effectively the cost of doing a whole lot of business. Anything that needs to be transported, anything that requires oil as an input, all those costs start to slowly rise.
The increased volatility comes as Canada is still being hammered by U.S. tariffs, which contributed to the country losing 84,000 jobs last month, one of the worst hits to the labor market outside of the pandemic.
The uncertainty associated with market access has, to a certain extent, impacted business decisions to invest and hire, which dampens demand.
The Bank of Canada will be forced to weigh a weaker economy against inflation risks from the Iran war when they deliver the next interest rate decision on Wednesday, Donna, with economists expecting the central bank to hold its current rate of 2.25%.
Jillian Piper, thank you.